A very good evening and a warm welcome to Pan-African Personal Finance. I'm Gugulethu, Cele. Well, they say only two things in life are certain, and that's death and taxes. Tonight, we take a look at the one that more often than not, we're often afraid about talking about, which is death. What does financial preparation for your death entail? Well, to help us explore this topic further, I'm joined by Bruce Flemming. He's a certified financial planner with Consolidated Financial Planning. Karin Bongers, who's a product development actuary at Sanlam, both of whom are in our Cape Town studios, and Toks Bello, who's the MD of Life and Retail at Cornerstone Insurance in our Lagos bureau. Ladies and gentlemen, thank you so much for joining us today. Toks, let's start off with you to get a more West African and Nigerian perspective on the topic of death. I know it's often something that's very taboo to talk about, especially when there's money attached to it. But how does the West African or Nigerian environment compare?
Thank you very much. Well, in Nigeria, because of the cultural aspect of it, where people believe seriously in religion, if you want to try and sell life cover, you are probably in competition with God. However, it's a country where you need it mostly, because over here, you do not have adequate medical facilities, security is an issue, the roads are not particularly good. So there is no place where you need life insurance much more than here.
You are quite right there, Toks. Let's get a South African or sub-Saharan African perspective now, Toks, and bring Karin into the conversation just to get things flowing and give us a picture rather as to what the detail looks like. Karin, when you look at the South African landscape, how do we compare to our African counterparts when it comes to having the appropriate financial plan in order to ensure that your death is taken care of?
The market is, as everyone knows, quite underinsured. So there's still a lot of people that don't have life cover. And like you would also know, life cover is essential, especially if you have debt or if you have dependents. So there's still quite a bit of, I think, education necessary for people out there to know why they need it.
If we turn our attention now to Bruce, to bring your voice into the conversation. So we know that people are underinsured across the continent, both in Nigeria and South Africa. We've determined that. But what products are available? And should one just look into a savings account to prepare for their death? You've got life insurance, you've got funeral policies. There's almost quite a vast array available for consumers out there.
Yeah, I think, Gugu, the first point of call would be to go and see your certified financial planner about this. But you know, I see life cover as a grudge purchase. A lot of people see it as a grudge purchase, as in short-term insurance, etc. But yeah, I think life insurance is there to protect your family. You're not there, and it all depends on the age that you're at. The younger you are, the more likely you're going to need life insurance because you don't have sufficient other assets to look after your family in your untimely death. So the younger you are, the more essential, I believe, life cover becomes. And as Karin quite rightly said, it's there to pay off debt. You need liquidity in your estate. I know we're going to come to that a bit later. And also, life cover can pay directly to your dependents as well, which bypasses your estate and can assist your dependents while your estate's being wound up.
I'd actually like to stay with you for a moment there on that particular topic, Bruce, because you say it's often times that younger people need life insurance. I take it that for a lot of young people that's often taboo because there's a misconception that they'll essentially, quote unquote, live forever. How do you deal with those dynamics? And in your observation, is there that particular misconception that life cover is actually for more mature individuals, if I can use that word?
I don't think so, Gugu. I think, people are becoming a lot more educated around this in South Africa. And I think you're more likely as a 25-year-old to die in a car accident, as an example, than somebody who's in their 50s, who maybe drives at the speed limit. So, yeah, I think life cover is an essential component of any financial plan. It doesn't matter how old you are.
Toks, let's come to you in our Lagos bureau to get your views on this. Is life cover and life insurance a difficult sell? We've heard from Bruce that it is a grudge purchase. Sometimes people in the younger age groups don't often consider it a priority. But in the Nigerian landscape of things, who's purchasing this particular product?
Yes, it is a grudge sale. However, if you have the agents that have a proper understanding, it's easier to sell. Because what you first need to get the client to understand is to establish a need. And once you've established a need, it's an easier sell. So irrespective of age, as long as you have people that are financially dependent on you and you love them enough to care about the sort of lifestyle that they will have after your departure, then it's an easier sell.
Karin, you obviously deal with product development at Sanlam. Which particular products work differently? And maybe if you can walk us through some of the nuances, because in South Africa, funeral cover is a very popular one. How does that compare with life insurance and other forms of savings for one's death?
Okay, yeah, it's good maybe to just make sure our listeners understand the difference between funeral cover firstly and life cover. So funeral cover is more aimed at all those immediate expenses. When there's a death, all the expenses you'll incur to pay for the funeral. So the funeral benefit pays very quickly, and it's also quite easy to obtain a funeral benefit. There's little or no underwriting, but that does mean that it's more expensive per rand of cover. So if you want to not just look at covering the costs of a funeral, if you're rather looking at covering your debts or providing for your dependents, life cover is the one to look at. And there's a lot of products out there. Life cover is quite standard in the market. It usually just pays a lump sum when the life insured dies, and there's quite standard features. There's usually a terminal illness benefit included. There's a 2-year suicide clause. So the products don't really differ that much between companies. But you do have different kinds of products. So you've got the fully underwritten one that covers you for natural death as well as for accidents. But then you also have other options, like you get accidental death cover. So that would be a good option if you perhaps uninsurable, if you've got some medical condition that you're not able to get other insurance. There's cover for HIV positive lives. Sanlam recently launched recognize that HIV is just another chronic disease like all the other diseases out there, and that it's quite manageable. So if you are HIV positive, you can get normal life cover. And then there's other options as well, like a death income product, waiver of premium at death. And then you can even go towards limited underwriting products where there's a bit less underwriting, but then again you will pay a bit more for that. So depending on how much admin schlep you're willing to go through, you can choose the product that best suits your needs.
So I take it one obviously has to sit down with a certified financial planner, as Bruce alluded to be able to understand what your needs are, Karin. But to come back to you, Karin, not only on the how do you choose which one best suits your needs, but also is there a potential link here to retirement savings or retirement annuity where life insurance and retirement savings actually go hand in hand? Are those, or is that a particular product that is available on the market for consumers?
In sort of a few years ago, we had the universal life kind of products where savings and risk was sort of combined into one product. Since about 2000, I'd say, insurers have again started to rather take the risk portion out to make it more cost efficient. So most products these days, you get the very pure risk products, and then in addition you get a separate product to cover you for retirement. But some products do have certain loyalty bonuses or cashbacks built in that might only pay out at retirement so that it can boost your retirement savings. But typically you would need a separate RA or some other kind of savings product to care for your retirement needs.
Toks, let's come to you in Lagos once more. You've alluded to the fact that you need to create the need and get the product to the people there. But looking at the list that Karin has highlighted for us, there's a lot available in the South African market. When it comes to Nigeria, is the landscape for life insurance as competitive? And more importantly, how do you decipher the information to make it understandable to the ordinary man on the street who might be HIV positive and uncertain if they can also qualify for life insurance?
Well, because the insurance penetration level in Nigeria is still very low, life cover is very competitive. In fact, it's very cheap. This is to make sure we can attract enough people to get the benefit on affordable terms. In most instances, if you have a good financial advisor, they will actually tell you all the features that comes with the life cover. So yes, here we do cover people that are HIV positive as long as you adhere strictly to your medication. So we'll do regular tests to make sure that yes, you are actually taking your medication as and when due, and that you are responding positively to treatment. So we tend to go out once in a while, almost like a crusade, to let people know the benefits of life cover. But as I said, it's still a difficult sell here.
Bruce Toks mentioned speaking to the financial advisor, and obviously this brings you into the conversation because it's a difficult analysis then clearly that you must make in order to meet your client's needs. It's a full and thorough needs analysis. It's the understanding of the particular products that you're selling, and more importantly, evaluating the risk appetite of the consumer that you're serving.
Yeah, absolutely. And I think you know, when you meet with your financial planner, they should do a comprehensive financial plan for you. So what they will do is they'll not just look at your life cover in isolation. They'll look at what other investments you've got, what your retirement planning looks like, what your estate planning looks like, do you have sufficient liquidity, all of that sort of thing. And I think what Karin alluded to earlier was quite correct, and that you should be keeping your life cover and your investments separate, because you know those traditional products were diluting both your life cover and obviously your investments. So we definitely keep the two separate, but look at it holistically in a financial plan. Yeah, so that's what we would do.
Bruce, to stay with you, how often should one review their life insurance cover or life protection insurance?
Well, I think there are two levels to that, Gugu. I think, you know, you should be seeing your financial plan at least once a year. You should be doing a full comprehensive review where he would relook at your, or he or she would relook at your whole plan annually. And obviously if anything happens in between those annual reviews, such as taking out additional debt or whatever the case might be.
Well, we're going to take a quick ad break. When we return, we continue with our conversation regarding financial planning for your death. Welcome back. We're talking financial planning for your death, and we continue our conversation with all of my guests. But Bruce, I'd like to come to you. Before the ad break, you alluded to something regarding estate planning and liquidity in your estate. Let's take two steps back and let's unpack what estate planning actually is, and then the need for liquidity within this particular function.
Sure. I think the big mistake a lot of people make is they look at estate planning as just planning for estate duty purposes. Now, as we know in South Africa, the first 3.5 million of your estate is free of estate duty. So the majority of South Africans actually would fall below that. So when it comes to estate planning, there are a lot more things to consider, such as, is your will correct? Does it leave your assets to the people that you want to leave it to, for example? And the other most important thing is, as I said, liquidity. Do you have sufficient liquidity in your estate, not only to pay your debt, but certainly to pay the other last expenses such as executors' fees, transfer duties, all of that sort of thing. So that should be encompassed in a whole comprehensive financial plan, as I spoke about earlier.
Karin, I'd like to come to you for a moment before we go to Toks. Is it ever possible to be underinsured when it comes to life insurance products? As we've heard Bruce allude to, you need that liquidity to ensure that you can make all the necessary payments and maybe come back with change for your dependents.
Definitely. It's a huge problem, and I think the reason for the underinsurance is because life cover is expressed as a lump sum generally. So most people would they will sit with their financial planner, and the financial planner would make all the calculations and would maybe recommend them a certain amount of life cover. But then if that is more than what they bargained for, more than what they are prepared to spend, then they would typically take much less. And the problem is, because it's a lump sum, it sounds a lot. So they would sort of think they're fine because they have 2 million worth of life cover. But if you sit and do some sums, I mean, if you, just as an example, if you are a 40-year-old and let's say you want to provide 30,000 Rand income for your dependents until you would have turned 65. If you use sort of a moderate discount rate for that, that implies that you need to leave them with around 7 million Rand to be able to do that. And I mean, 30,000 isn't even enough for some households. So it just shows you that people don't appreciate how long that cover needs to last, and then they are often underinsured.
Karin, having said that, is it ever advisable to have more than one type of life insurance cover?
Well, yeah, like I said, life insurance is quite standard. So even if you go to different companies, you would probably end up with more or less a similar product. But maybe you can take some accidental death extra because it's a bit cheaper. Maybe you can opt for some for death income cover. Death income cover is quite useful if your need is specifically to provide for your dependents, because it pays a monthly payout, so it's a better match for that monthly need. So the big risk of the cover running out is sort of eliminated with that product, because the company promises to pay a certain monthly amount to your dependents until you would have reached, let's say, 65 years old. You choose that age beforehand. So a death income product is definitely something to consider in terms of caring for your dependents and making sure that they are provided for. A death lump sum product would be more appropriate to pay off debt, because you need a once-off lump sum to do that. So yes, there's definitely room for different kinds of products. And in the waiver product, if you have other benefits on your policy, let's say your spouse is also on your policy, if you take a waiver of premium at death benefit, then it ensures that her benefits can stay intact if you were to die. The company is saying that they will waive the premiums for her benefits, so she can keep her cover, because she would most likely not be able to pay the premiums given that you were the breadwinner. So there's different kinds of products, and it is good to, yes, have a range of the different kinds.
Toks, let's come to you now. Maybe if we can explore, obviously, as you mentioned, that insurance is a very tough landscape in the Nigerian market and actually comes through quite affordably. Are there considerations made within these product offerings to allow for the tax implications that might be involved with estate planning and estate duties, and also the importance of a will and testament on the part of the party who wants to be insured?
Yeah, in Nigeria, most life policies are tax deductible, both the premiums and when the cash benefit is being paid, is also paid tax-free. So we call them over here qualifying policies. So it's got an enormous tax advantage. So from the premium you pay, they are tax deductible, and the cash benefit that is being paid to the beneficiaries are paid tax-free. It's also important to have a will, because in the event of death, while someone is intestate, you work all your life, and your beneficiaries, your dependents, will not have easy access to what you've built up. So in the event that you do have a will, of course, this helps to fast track getting the benefits to your beneficiaries. So it's very important that we have a will. And in some cases where you have inheritance tax, in this country, you can also use the proceeds of a life policy to offset the inheritance tax. So there are different uses of life insurance.
It sounds like a very competitive landscape, as you've alluded to, with a lot of state assistance there. But having said that, Toks, are Nigerian consumers taking advantage of the tax deductions that are available and the tax-free payouts that are available on life insurance cover by actually making sure that they purchase these particular products?
In Nigeria, a lot of the learned people who have been sold to properly are actually making use of these tax benefits. So some people, in addition to the benefit of the life cover, it's also an incentive for them to make sure they keep paying their premiums, because it's offset against the tax they have to pay and they have paid already.
Bruce, let's come to you before we get our closing points. It's almost unfortunate that in South Africa we don't have such tax incentives, but maybe walk us through other benefits that consumers need to consider when it comes to that grudge purchase regarding life cover.
Yeah, well, I think we spoke about it briefly from a liquidity point of view, but do you mind if I just go back to the wills? I think people in South Africa generally don't have wills, which is absolutely crazy, because it takes away what we call your testamentary freedom. And Toks touched on it earlier as well about leaving your assets to people that you want to leave your assets to. And if you don't have a will, your estate will devolve in terms of what our laws call the Intestate Succession Act. So people needn't worry, it doesn't go to the state. It's just that it's in terms of the Intestate Succession Act. But it does take away your testamentary freedom. And then just pointing onto life cover again, if you nominate a beneficiary on your life cover, that'll bypass your estate and go directly to your beneficiaries. And Karin can probably speak about this a bit more, but generally, if you have a beneficiary, those policies pay out a lot quicker. I've heard talk of 48 hours. I'm not sure it's that quick, but you know, beneficiaries get paid directly as opposed to going through the estate.
Karin, I take it you agree. Share your thoughts with us.
Yes, well, it's true that we pay directly to beneficiaries, but in terms of the time frame, funeral policies do make that commitment to say that they pay within 48 hours. It's unfortunately not 48 hours from point of death, it's rather from the point in time that the company receives all the requested documentation, like the death certificate, etc. But in terms of normal life cover, there's quite a range. It all depends. It can take longer, and that's why you need funeral cover. You can't rely on your life cover to pay for a funeral, because it might take too long to pay. The funeral might be over and done with by the time you get your life payout. And the reason why life cover takes a bit longer is, especially as the cover amount gets larger, the company needs to be a bit more careful and needs to do all the relevant checks. But there typically does need to be checks for fraud. There needs to be checks, if it's a very early claim, checks for non-disclosure. So just check whether the person, when they initially took out the policy, were they truthful about all the health questions that they answered. If it was an accidental death, there could be a police investigation that needs to first get to a certain point before we can pay. So for all those reasons, it does take a bit longer. But yes, when we do pay, it's good if we pay directly to the beneficiary.
Well, let's have a quick recap on the key takeaway points from this discussion. Bruce, let's start off with you. If there's anything that African consumers need to remember from this conversation, give us your top 3 or even 5 points.
Well, I think I can give 1 point. You should go and visit your financial plan and get a comprehensive financial plan done, because a financial plan, as I said earlier, doesn't just cover your life cover. It covers your investment planning, your retirement planning, your estate planning. Have you got a will? Is your will written in such a way that it's going to go to the beneficiaries you want it to go to? So there are a lot of things that you need to discuss with your financial planner. And please, whatever you do, make sure that you have a comprehensive financial plan.
Karin, your key takeaway points from tonight's discussion?
Yes, I think I'd like to make 2 points. The first one is, if I think there is sometimes an assumption out there that everyone needs life cover. That's actually not the case. If you are young, you are single, you don't have any debt, you don't have any dependents, it's debatable whether you actually need life cover. You might need a bit to cover your expenses when winding up your estate, and you might need some funeral cover, but generally your most important asset is actually your ability to earn an income. So disability income cover is very important for that kind of client. Another point I just want to make is, if you do, like Bruce suggests, which you must do, if you go to your financial planner and he does a financial needs analysis, and he suggests that you take a number of types of benefits, and he gives you the cover amounts. If it looks like, if you sort of see that you feel you can't afford it, the big mistake people make is that they then just opt for the life cover instead of rather taking a bit of everything, because you're much better off if you have a little bit for each kind of event than being completely exposed to all the events except death. So it's a much more prudent approach to rather take a bit of death, take a bit of disability cover, a bit of dread disease. And there are products out there. Sanlam has a core product we launched a while back. There are also other products in the market that gives you, instead of, it's sort of a package that gives you a bit of different cover. So rather reduce your sum assured and stay at the same premium that you want to pay, but make sure that you are covered across the board instead of being only covered for the event of death.
Toks, it sounds as though it all goes back to getting sound financial advice, but what are you hoping consumers will remember about this evening's conversation?
Well, the most important part for me is, due to the adverse financial consequence of the death of a breadwinner, which we see day in, day out, you cannot afford not to have life cover. The second part is, people normally think of affordability. So what I will advise is, we need to apportion appropriate percentages of our income to our various needs. It's obvious if someone pays 100% of their salary towards a pension, they will not live to retirement. So what we need to do is apportion appropriate percentages of this income to various needs. And life cover is definitely a priority.
Well, that's a good note to leave it on. Life cover is certainly a priority. And that's where we leave it for Personal Finance this evening. A big thank you goes out to my guests, Bruce Flemming, Certified Financial Planner with Consolidated Financial Planning, Karin Bongers, who's the Product Development Actuary at Sanlam, both from our Cape Town studios today, and not forgetting Toks Bello, who is the MD of Life and Retail at Cornerstone Insurance in our Lagos Bureau. Do remember that we want to hear from you, so get tweeting and share your insights with us to @CNBC Africa using the hashtag Finance410 or to myself at Gugulethu on Twitter. Until next time, it's goodbye for now.